having payments that are aligned weekly or daily are an absolute disaster for your business. The only way to do that, preserve your profit, execute the work, is to actually execute and perform the work and be paid. Any lender who is willing to give you a loan that's outside the parameters of how you can afford to pay it back, it has no benefit to you, and they're certainly not looking out for your best interest. Welcome to the next episode of the Construction MF'ers podcast. I am Scott Peper, founder and CEO of Mobilization Funding, and today we're going to talk about how to pick the right construction loan for you. And we're going to do that based on the cash flow of the loan. So let's get right into it. First rule of thumb, not all loans are the same. Second rule of thumb, you need to know what things are most important about the loan that are going to impact you the most. And I got a news flash for you. It is not always the cost. Sometimes it makes sense to have a higher cost because you can actually be more successful and make money. Sometimes it makes all the sense in the world to not have any loan at all. And other times it makes sense to take cost as the primary factor. How are you going to make that choice? That's what we're going to talk about today. Well, we're in the construction world, so we're going to talk about construction loans. Let's kick that off. Let's just talk about the actual amount of loans, type of loans, the structure of them, what your choices are, where do you go get these loans from, etc. I'm going to rip through these real quick. On our YouTube channel and other places, we talk about these in great detail, but I'm going to run through some of the basics. Here's your options. You have an SBA loan for your business. You have factoring, where you're actually going to have your invoices purchased for you. You're going to have third-party private type lenders like Mobilization Funding or others. You might have material financing lenders. You're going to have merchant cash advances. Those are the daily and weekly type loans. And then, of course, you have traditional banking that may be available to you in the forms of line of credit, business loans, etc. What you need to know and what is most important and critical to you is you have to know your numbers of your business. In order to get any of these loans, you need some type of finances organized in a financial reporting that you can use, like an income statement, a balance sheet, a cash flow chart. All of these things are critical for you to choose what type of construction loan is perfect for you. But what comes next, and this is where I want to focus your attention, who you're seeking out to get the loan from, i.e. either a bank, a broker to help source many different lending types for you, is really important because you have to be talking to and seek advice from someone who understands your business, who understands your construction business, understands the cash flow of the construction industry. Because otherwise, if you just go out to try to get as much money as you possibly can for the lowest possible cost, you can actually do some significant damage to yourself, your future plans, and any goals of success. Because I'm here to tell you right now, getting an SBA loan for $2 million, for example, at a very low cost over a 10 or 20 year period may seem great because you're going to put $2 million in your account. But $2 million at 8 or 9% interest is a significant interest burden to a business who might only have $3, $4, $5 million of revenue. And you're going to take that $2 million, you're going to feel the need to do something with it. What are you going to use it for? How are you going to use it? If you're trying to map out the use of those dollars and you're taking just any project on to handle that debt service or to handle the next wave of projects, you have to really know how you're going to use that and how that's going to cash flow into your business and back out of your business. That's a pretty involved cash flow model to use overall for your business. Think about it. You have a cash flow for every project or every customer. It's going to flow all together, and then you're going to blend that into one big cash flow for your company. Now, if you're sitting there thinking, well, I don't have a cash flow for my company, then this is exactly what I'm talking about, because you do not need to take on $2 million unless you know how you're going to use it, or any type of large number up front that you can't allocate to a specific job depending on what your company size is. Let's get down into the weeds a little bit more. Let's talk about a construction loan and why you might need one. Well, the typical scenario is someone's working hard, they're doing their thing, they're getting work, they're accomplishing the work. They're performing the work. They're adding a customer. Then all of a sudden, as you start adding these customers and you're doing a good job, somebody's giving you more and more work, or you may be bidding more and more jobs, and then you're awarded that bigger job, or you're awarded a bunch of jobs all at the same time. And so now you're seeking capital or a construction loan to actually execute that work. And that's great. And that is perfect for what you should try to find a loan for. However, if you're looking for that loan at the same exact time that you're trying to determine what's the best type of loan, it's going to be really hard for you to figure that out unless you have some real details. So if you're out in the middle of these projects and you're figuring out this problem in the middle of them, you're already behind the 8 ball. Your options are going to be limited. The SBA loan, you might be able to consider factoring. You could certainly find material financing or a loan like mobilization funding. And despite all of those merchant cash advance loans, those are the ones that the brokers will sell to you that are daily loans or daily debit loans from your bank account or weekly debit loans from your bank account. Those are going to be the easiest to get, the most costly, and absolutely the most destructive to your cash flow cycle. Plainly put, if you get paid once a month and you can only invoice once a month, having payments that are aligned weekly or daily are an absolute disaster for your business. Because of the cost of those loans in addition and the way in which you have to take them on, those costs typically are going to eat up 1 or 2 of your project's profit just alone by themselves. So using and the use of those cash that you get from that job is critical. If you're using it in an emergent situation like making payroll because you're behind or having to pay a supplier, that's only going to be a bigger detriment to you. So let's talk about factoring. Well, factoring, if you can make it work in construction and you can find a construction factor and you're working for clients that will allow you to factor their invoices, it's a great resource for you. You can utilize the tool, you can assign your receivables to them, they'll buy your invoices, advance you some of the monies in advance, typically somewhere between 70 to 80%, and then you'll have that extra dollars at the time of invoice, and then you'll be able to help manage your cash flow better. You guys keep hearing me talk about cash flow because if you don't know what your cash flow is, then you never know how to use these dollars, whether they're coming in from a loan, coming in from a factoring company, or at any point they're coming into your actual revenue cycle of execution of the work of the project you have. So it's so critical to understand that cash flow so that you can know how to use the right loan product, right construction loan for you for what you're trying to accomplish. All right, the next types. Let's talk about material financing. If you can get material financing from the actual material supplier yourself, i.e. talk to the credit, get credit terms like 60 days or 90 days or paid when you're paid, that's the best form of construction lending you can possibly get. Or let me say that again. It's one of the best forms, not the best, but one of the best. It might be the best for you in a scenario. If you can finance a lot of your material and your supplier is willing to do that for you, even if it's at an additional cost, maybe a couple dollars here or there, a couple percentage points, it might be worth looking into. The only way you're going to know if it's worth it or not is if you understand the cash flow of how that's going to impact your project, if you understand the cash flow that you have from your other projects and in your business so that you can still handle and maintain your payroll or contract labor. Because if you can't do that, but you're financing your material or getting better terms from material, you're still going to be in a tough spot. And you're better off looking at other loan programs for that case or combining loan programs in that case. The next form would be a loan like mobilization funding. Something that you can get the money up front prior to invoice. You can use it for labor, materials, equipment, all types of project-related costs, and it's blended from the start of your job throughout the point until which you become cash flow positive. At Mobilization Funding, we actually map this cash flow out for you because it's something we want to know up front. We want to know how much money do you need, where do you need it, when do you need it, how do you need it, what's the use of funds going to be for. We do all that work with you and for you because we want to make sure we have not only the right amount of dollars in a loan, but we also want to make sure you don't have too much or too little. And we also want to make sure, because you're using the dollars for project-related expenses, that as you're paid from the project, those items are paid back for. The goal isn't to have a loan for your business. The goal is to have use of dollars so that you can execute the work that you know is profitable, that you can bill your customer, be paid, and then you can actually keep and preserve your profit. The only way to do that, preserve your profit, execute the work, is to actually execute and perform the work and be paid. So what we're doing is mapping out that cash flow for you, which is the same thing I'm suggesting you do whether you take any of these other loan products. And then that way you're able to see exactly what you need, when you need it, how you need it to perform, to be paid, to realize your profit, and then put that in your bank. Those are the key things that need to be done, and that's what one of the things that I suggest you all do. And if not, even if you're using the other material financing, you can use our free cash flow tool on our website. You can build it right on the website itself, or if you like Excel, you can download the Excel file. But worst case scenario, you can build the cash flow for your project right on our website with just your bid sheet and answering some basic questions as you tab through the sheet. And then we will produce the cash flow for you, letting you know how much cash you need, when you need it, and how much it's going to cost you. We unpacked a lot of information there. Let me tell you a real world story about exactly this kind of scenario. So we had a potential client come to us. They had a merchant cash advance already that they had 2 months left to pay on. They had already paid on this weekly for 10 months, almost 40 some payments they had made. They had 8 payments left, which was going to take them 2 months. But they were really struggling cash flow wise. They were right in the middle of their project. They were starting another one, and they were really struggling on figuring out what to do. They had, of course, multiple options to take merchant cash advances, but they wanted to avoid those at all costs. They had already withstood the pain of going through those 48 weeks with weekly payments. They understood the costs. So what did they do? They were looking at an SBA loan, but it was going to take too long. They came to us to figure out what they could do to finish that project. What we were able to determine with them is they had the real pain point was the fact they were starting the other projects and needed to. They could finish the project they were on that were halfway through, and they were almost cash flow positive with that one, despite keeping current with that merchant cash advance. But we were able to make a loan for them for the new project, which actually took all the pressure off of the rest of their business and the cash flow of that business. So all of their dollars coming in from other projects, from other work, was able to go towards finishing that job. What they were really concerned with, and by running the cash flows on both the current project that they had and the new project they were about to start, they could see effectively they had the dollars they needed to get through the project they were on. And despite coming to us to try to get a loan for that project, because that's where the pain was being felt at the moment, the real pain was they knew they also had to start this other job in a couple weeks, and they were going to need dollars, payroll, equipment, deposits for material, all these other items that were going to have to go onto that job. And that pressure was going to be what broke them 2 weeks later. So what we were able to do is build a loan to execute the new project for them, which took all the pressure off of the existing project, allowed them to take the cash they did have coming in already from their receivables, finish that job, finish out the 8 other weeks of payments for the merchant cash advance, put that to bed and retire that, and then run free on the next project. And they actually were cash flow positive by the time they were paid 50% of the new job. That means utilized us, dollars from our loan, bought the material, covered their labor, got paid 50% of that project, completely paid us back at that point, and now they were cash flow positive to move on. Those are the kind of scenarios that you can make and see when you have the cash flow tools in front of you and you can make those decisions. You can also see how the wrong cash flow cycle of a loan, a construction loan, can also add a significant detriment to your work. For example, if you have construction contract labor that you pay every single week, that has a certain feel in construction cash flow to you on a project than a labor contractor that you can actually pay when you get paid. Same exact thing. If you have a loan that you have to pay weekly versus a loan that you can pay monthly, or a loan that you can pay when you're paid, that's the exact scenario I'm talking about. So just imagine, if you're looking for a construction loan and you're going to think about the cash flow of that construction loan, it needs to align to the best possible scenario for you, which would be pay the loan when you're paid. Just like if you could take all of your contract labor, or even your direct labor for that matter, and pay your labor force when you are paid, think about how much easier that job is. Now, imagine how much more difficult is it to cash flow a job when payroll comes every week? It's a lot more difficult. Well, that's the exact reason why you do not want to have a construction loan that isn't conforming to the way your cash flow cycle is for your industry. And to be very frank, any lender who is willing to give you a loan that's outside the parameters of how you can afford to pay it back, it has no benefit to you, and they're certainly not looking out for your best interest. Keep that in mind when you're looking at the different construction loan options. Analyze your cash flows, use the tools available to you, but most importantly, make sure that you're looking at the right type of loan for the time period you need it, when you need it, and not only is cost important, but cash flow of how that loan and how that loan is going to be utilized is even more critical to your business and the success of your projects, the loan, and you paying it back. I hope this information was helpful to you all. If it was, please share this with your friends, pass it on to your members in the industry, and most importantly, utilize the information that's talked about here today so you can improve, you can run your business better, you can sleep better at night, and when you do take out loans, you're taking out the right one from the right place with the right people. God bless you all. Have a great day.